Hey guys, welcome to another episode of the Hoan Zone. I'm Hoan, and we are going to help you multiply the assets you own. In today's video, we are going to be continuing the mini-series on how to buy properties with low or no money. And today's episode, we are going to be talking about private lenders. But before we do that, if you haven't yet subscribed, please subscribe to the channel because I'm going to be releasing a new video every Monday and Wednesday so you can buy more assets. There are over 200 million people over the age of 18. There's over $27 trillion in retirement accounts, and a ton of people made a ton of money buying cryptocurrencies. Why does that all matter? Because they can be your source of private money. Let's first start talking about what is private money. A lot of times people say, Hoan, can you give me a list of private money lenders? And the answer is no, because these are private lenders. They are private to me. They want to lend me money, not anybody money, but they want to lend it to me. Now I could maybe make an introduction. Hey, this is my friend. He's looking to do real estate deals. He was wondering if you'd be interested in being a lender in his deal, blah, blah, blah. They are private though. Don't think you can go Google private money lender list. Now they may come up, but it's just a weird thing. That might be something else. That might be a hard money lender saying that they're a private money lender when technically I guess they are. They're a private money lender that lends money professionally. But a true private money lender is a person who knows you guys have a relationship, and they're interested in lending you the money. Now, what are some reasons for people wanting to become a private money lender, a private partner, whatever it is? Because of the money. They're going to make more money and possibly without doing any work. If somebody lends me money as a private lender, then what they can expect is that I'm going to pay them back interest and they won't have to do anything for that interest other than give me money. Before we go too deep into it, it's very important that I go over this very nuanced thing. There are 3 different types of private money that you have to account for. Private money lenders, investors, and partners. And people use these interchangeably, and they are wrong a lot of times. You don't want to mix and match because they are not the same thing. Let's go over the differences. A private money lender is somebody who lends you money, and what you give them in return is a note and a mortgage. It's documentation that says you borrowed the money and you're going to be paying them back interest. Right? That's all they're getting. It's very similar to what a bank does. They give you money for your property. You go buy the property, and between you guys, there's the contracts, note, mortgage. There are other things that you may want to add them onto, such as the property insurance and things like that. But I'm not going to go too deep into all of that. I'm going to save that for possibly another video. So that's lenders. Then you have your partners. Your partners are the ones who are in it with you equity-wise. They give you money. They are part of the deal. They also can give you advice or direction with the project. Actually, they're supposed to if they're a real partner. They're not a silent partner. We're going to get into that one in a bit. But a partner, in it, they have equity. You're not necessarily paying them interest every single month because they have an equity stake in the game. Why you might want a partner versus a lender is if the project doesn't have a lot of cash flow and you can't float the interest monthly, or if you don't necessarily want to take on all of the risk yourself, you can bring somebody else on who is willing to take the risk, but also get the reward if the project does really well. You might give up some upside for less risk. That's why you bring on a partner. They only get an equity piece. If the project does really well, they win. If the project goes sour, then they lose just with you. They lose alongside of you. The final one is a private investor. This one is the most complicated one. This is where a syndication lawyer is brought in. You create something called a Reg D 506. I just want to expose you to the idea so that you can talk to your professionals and ask more questions, right? But this is where the syndication, where you raise a bunch of money from a lot of different people into a LLC that then goes out and buys a property, usually a big apartment building or something like that. This is where you're raising millions of dollars from other people. They all pool the money together in your private placement memorandum, and then you guys use that money and then you go buy the property. That requires a lot more paperwork. That's more complicated, but it is not something that I don't want you to do. I don't want you to avoid it because it's complicated. I want you to hear about it. This is why I'm just bringing it up to you. I'm just exposing you to it. And then what you're going to do is you're going to learn more about it. And then you're going to figure out how to take down a big apartment building or something like that. Now, when it comes to the actual money, where is the money coming from? Now, we talked about you got your private lender, your partners, and then your investors. But where are they getting the money from to be that for you, to be the money person for you? Well, it comes from a couple of different places. They can either get it from their checking account, savings account, right, their traditional bank, or they can get it from their retirement account. This is very popular. People have retirement accounts, and if you can roll their money into a self-directed retirement account, either an IRA, 401k, anything like that, then they can self-direct it your way into your project. If you learn how to work with retirement accounts, you have access to much, much more money. That's why you got to learn this stuff. Checking accounts, retirement accounts, people also have money in their life insurance policies. People who have whole life insurance policies or an IUL or something like that, a permanent, as they call it, permanent life insurance policy, they have what's called cash value. You can access that cash value. They can take out a policy loan, they can get the money, and then they can lend that money to you. And then when you're all done and you pay them back, they pay back their policy and they make the difference. They make money on money that they borrowed from their insurance policy. Again, another video at another time. But you have to know where people have their money. And a lot of times they don't even know that they can do this stuff. Now, there's a pro and a con to all three. I know what you're thinking. When do I approach people about being a lender? When do I approach people about being a partner? When do I approach people about my syndication and becoming an investor? It really depends on your deal. If you have a super small deal and you can afford the interest payment, then maybe you want them as a lender. Or you can negotiate with them that you don't pay them until the end. That happens too. It's all good. With a lender scenario, you take on all the risk. You're expected to pay them their interest regardless of how the project does. If the project does really, really well, then you knew what your interest rate was going to be. That was a fixed cost. That is it. If the project does really, really well, you don't owe them more money. You get to keep that money for yourself. But if you are taking a loss, they still want that same amount of money. If you have a partner, you guys share in that risk, but then you also share in that reward. And then finally, you have the investor. The downside with using the investor model with the syndication is that you have attorney fees and you have additional complexity. That's not so good, because what if it's a really small deal that doesn't justify all of that? Then you may want to go the lender route or the partner route. Here's the other cool thing. You can do the partner route and the lender route. You can have a partner bring some money, and then you can have a lender bring the rest of the money. The lender doesn't want any risk in the deal. They just want their interest rate. And then the partner is willing to take on some of that risk for potential upside. You can create that whole thing. You can come to the deal. You bring the property, you bring your expertise, you bring your team, somebody brings some money as a partner, and then somebody else brings some money as a lender. And all of a sudden, you've matched up all of this money with your expertise, and you guys have a deal. What you want to do is figure out if an lender, partner, or investor is the best fit based on who you know and the size of the project. With the investor model, I would say that you don't want to do anything under $1 million, maybe even under $2 million in that syndication model, just because the legal fees are so much. So really understand all of the pros and cons of each one so that you know how to appropriately pick based on your deal. Now, the biggest question I get all the time is, Hoan, I don't know anybody with money. What do I do then? Well, that is your belief that you don't know anybody with money. Like I said, there are 200 million people above the age of 18 in America. That is 200 million opportunities to raise money. Go talk to people. If in your circle nobody has money, then begin talking to people outside of your circle. It just makes sense, right? It makes no sense that you stay within your circle, in your little sphere, when the world is so big and the internet allows us to connect with so many people so easily. Once you figure out all of these different people, how do you get them to give you money? Well, you got to ask yourself, would you give you money? And the answer is no, then nobody else should give you money either. What you have to do is you have to develop your skills and your confidence and your resources and your network. And you have to develop all of these things to the point where you are confident enough to do a deal. This way, when somebody sees you, they're going to be like, wow, I don't mind giving you money because I feel confident that you will be able to return the money. You will not only return my money, but you're going to give me a return on my money. Return of money, return on my money. That's what the investor is looking at. A lot of times, these lenders, investors, partners, well, maybe not so much the partners, but the lenders and the investors, what they care about is you. They're betting on you. They're not thinking about the project. They don't know what the rents are. They don't even know what zip code the property is in usually. They're looking at you. You have a request. Hey, may I borrow some money, or would you like to put money in a deal, or whatever? They're looking at you. They're analyzing and thinking to themselves, are you a good bet? You have to work on you until you are a good bet. Until you can prove to yourself that you would lend money to yourself. If you're at this point where in your life you're not sure about real estate yet, you don't know what you're doing, then don't take anybody's money yet. It is not prudent. It is just not the right thing. Not the right thing. Do not borrow anybody's money, even if they say yes, if you are not ready to take that money. Private money can definitely be an incredible win-win for both the investor or the lender and the operator. This way, the operator brings their skills, the lender, investor, partner brings their resources. You put that together and voila, you guys make a bunch of money. That's the ideal scenario, win-win for all. Learn how to do it, learn the pros and cons of everything, and become a really, really good operator. There's way more money than there are good operators. If you become a good operator and you develop that reputation as a good operator, then more people are gonna wanna give you money. Definitely work on yourself a ton. If you had 7 days a week, 24 hours in the day, spend most of that time just developing you and developing your understanding of how the investments work. In the comments below, put any questions that you might have about private money. Are you a private money lender? Are you interested in partnering? I love when people come together because of the Hoan Zone and become business partners. Whether you're a lender, investor, partner, whatever it is, get into the game. If you want to become a better operator, a better real estate investor, and you want to raise private money, but you don't know how, check out hoanzone.com. I have tons of training, and raising private money is one of the things that we always talk about because you never want to run out of that. That's an unlimited supply, but it is limited to your mindset. If you're not comfortable enough with raising private money, then that is the only limitation because there's almost an endless supply of money for you to tap into. All right, guys, this is the part in the video where you hit the like button because you enjoyed this video, and you're going to hit that share button and share it with your friends and family. Thank you guys for joining us at the Hoan Zone. Thank you for listening to this. Thank you for getting to this point of the video. Hopefully you go out there and find some money. All right, guys, see you in the next video.